Hello guys, welcome back to another video. On this one we are going to be looking at daily bias and draw and liquidity. So if that sounds interesting to you, make sure you stick around till the end of the video to get the best value of it. Also be sure to subscribe to the channel. I make daily video on ICT concepts, so if that sounds interesting to you, kindly subscribe to the channel, turn on the notification icon so that you get notified whenever I upload a new video. So without wasting much of our time, let us dive right into the video. The easiest way to frame a draw on liquidity or have a bias is using the previous day high and low. For instance, over here, unless the price is going to consolidate, we are likely to have the price take out the previous day high or previous day low, or both at the same time. But the way I look at this is that price is more likely to take out the previous day high or the previous day low. So for this example, price is more likely to take out the previous day high because we are on an uptrend. Similarly here, price is more likely to take out the previous day low because we are on a downtrend. The previous day high and low can also be used as a liquidity pool to frame a reversal. For instance, right here we have the price reaching the previous day high and failed to displace above that, then we have a reversal. Similarly here, we have a reach below the previous day high and a close above the range. For example, using the previous day high and low to frame a reversal, we have the previous day high right here. Price reached the previous day high and we have a close below that, so we expect price to reach the previous day low on the next day because of this failure to displace above the previous day high, and that is what we had on this candle. Then on the next day we also have a reach below the previous day low, then and a close above, so we expect price to draw to this previous day high, and that is what we got on this candle. So and on the next day, because price has closed above this previous day high, we expect a reach into the previous day high until we have a draw on liquidity. So that is all for this. We are going to go over to the chart and see how we can make use of this. On this example, we are going to be using the previous day high and low to frame a bias or draw on liquidity. For this instance, we have the previous day high here and we have a close above that, so we expect price to move to the upside, and our easy draw on liquidity will be this previous day high. So if we continue playing, you see that we have a close above the previous day high, so our easy draw again will be this high. So we expect price to take out this high, or we expect a move to the upside because of this close above this high, previous day high. We continue playing, you see that we take out the previous day high and we have failed to displace above that, so our easy draw on liquidity will be this low. Continue playing, you see that we have had a close above the previous day low, so our easy draw on liquidity is this low or another move to the downside. Continue playing, you see that we get another close below the previous day low, so I expect price to reach to this previous day low or a move to the downside. You see that we have another close below the previous day low, so our easy draw on liquidity with this previous day low or another move to the downside. If we continue playing, you see that the price has reached the previous day low and has failed to close below that, or failed to displace below that, so our easy draw on liquidity will be this previous day high or a move to the upside. If you continue playing, you see that we have an aggressive move to the upside, so our easy draw right now will be this high or a move to the upside. If you continue playing, you see that we have taken out the previous day high, we have a reach of the previous day high, but the price has failed to displace above that. So I will expect price continue our move to the downside. So if we continue playing, you see that we take out the previous day low and we have a close, and we have a close below that. So I will expect a reach to this previous day low, or my draw on liquidity, my easy draw on liquidity will be this previous day low or the next day. You see that the price has reached the previous day low but has failed to displace below that. So our next draw on liquidity will be this high or another move to the upside. And look at what's happened. You have the price taking both the previous day low and previous day high, and what we have, we have a close above the previous day high. So our easy draw on liquidity will be this high or another move to the upside. So if we continue playing, you see that we have an aggressive move to the upside. So I will expect a draw on liquidity of this high. So if we continue playing, you see that price reached the previous day high and has failed to displace above that. So I expect price to draw to this previous day low or a move to the downside. You see that we have the price taking the previous day low and has failed also to displace below that. So my easy draw on liquidity again will be this previous day high for the next day or a move to the upside. See that we get a close above the previous day high. So my easy draw on liquidity again will be this high or a move, another move to the upside. And you see that the price eventually take out our previous day high and has closed above that. So my next draw on liquidity will be this previous day high or another move to the upside. So guys, this is how you make use of previous day high and low to frame a draw on liquidity or have a bias. So we are going to go back to the PDF to show you other example of how you can use a previous day high and low to frame a bias or draw on liquidity. Another thing that I look for is the previous week high and low. For instance, I have a weekly range here and I have the weekly high and weekly low marked out, and I can use this to frame a reversal. As you can see, we have price reaching the previous week low and we have a close above, price failed to displace below, and our next target is the next range of the previous week high. I also use this to frame a draw on liquidity. On this example, my weekly range, previous week high and previous week low marked out, and as you can see, we have a return into the premium and a return into this other block. My next draw on liquidity will be previous week low, which is this previous week low that I have marked out right here. We are going to go over some example on the chart to know how we can use this to frame a reversal and draw on liquidity. On this example, we are going to use the daily charts to mark out the previous week high and low and see how the price reacts to them. As you can see, we have our weekly high and weekly low marked out this place, and it is extended to the next week. We are going to see how price reacts to this place. If we continue playing, you see that towards next week we have a ranging market. Price has failed to return to the previous week high and also failed to return to previous week low. What we are going to do is to mark out our high and low right here. So this is a short week and we have only 4 candles on this week, and we have marked out our weekly low and weekly high and extended that towards next week and see how price is going to react to it. So if we continue playing, you see that we take out our previous week low on Monday. What we are going to expect is for our next candle, maybe a return to this range and maybe to target the previous week high. So, and if you notice on the left hand side, we have a fair value gap right here. We have a fair value gap sitting right here. So price may also return to react to that and return to the previous week high. If we continue playing, we have a close above this range. What we are expecting is a draw on liquidity towards the previous week high. So if we continue playing, see that finally on Friday we reached our previous week high, and we also mark this week high and low and extend that to next week to see how price is going to react to that. So if we continue playing this, you notice that on Monday we take out the previous week high and we are failed to close above that. My bias now is likely a reach towards this previous week low. So if we continue playing, we get another down close candle. Price has failed to displace above the previous week high. So my bias now is price is more likely to draw to this previous week low. If you continue playing, you see that we have a move toward the downside. This is Friday already, and we also mark this week high and low. As usual, we have our weekly high and low marked out, and let's see how price react to that towards the next week. So we continue playing. You see that on Monday we have the price take out previous week low, and we have a close above the range. Price has failed to displace below this previous week low. My bias will be the price to draw to this previous week high. So if we continue playing, you see that on this candle we also failed to close below the previous week low, and on Wednesday we reach our previous week high. If we continue playing, you see that we got another extension towards the upside on Thursday. So as you can see, using the previous week high and low, you see how I was able to frame a reversal and also a draw on liquidity. So this is how you can make use of previous week high and low to frame a reversal and have a draw on liquidity, have a bias on draw on liquidity. On this section, we are going to be talking about swing point, failure to displace, and the next day model. If you haven't watched my video on swing point, kindly check the description of this video. I will leave a link that will take you for a detailed video where I discussed about buy side and sell side liquidity, and on that video I talked about swing point and swing lows. Kindly go ahead and check for that and come back to this one. Using swing point, I can use it to frame my draw on liquidity. For instance, we have this trending market and we are likely to draw to this swing point or buy side liquidity resting above here. I can also use the swing point to frame my reversal. For instance, we have this liquidity pool resting above here, and I can use that to frame my reversal, and that leads me to failure to displace above a swing high and low. For example, we have this swing low and price failed to displace below that, so my bias will be a move to the upside. The same thing goes here. We have this buy side liquidity resting above here, and price has failed to displace above that, so my bias will be a move to the downside or a down close candle on the next candle. And this leads me to next day model. Using next day model, PD raise and failure to close above old highs and failure to displace above old lows. For example, we have this low right here and price has failed to displace above that, so my anticipated bias will be a up close candle for the next day. So, and as you can see how that has played out right here. The same thing goes with price failing to displace above a swing high or an old high. As you can see on this candle, price has failed to displace this a high after reaching. We have a close below this range, so my anticipated direction for the next day or my bias for the next day will be a down close candle or a move to the downside. Using this example or this price action, you can see we have this high being taken on this candle, and this candle has failed to displace above that, so my anticipated bias for the next day will be a down close candle. The same thing goes with this other block or PD ray here. As you can see, as we reach towards this PD ray, price failed to displace above that, so my anticipated bias for the next day will be a down close candle. And as you can see, we have a down close candle. This candle closes below this range, so for the next day I will expect the price to reach for this previous day low, and that is what happened on this candle. And I will continue using this to frame my draw on liquidity, which is this swing low right here. Let's go over to the chart and see how we can make use of what we have just learned. On this example, we are going to be using the DSY chart chart, and we are going to be using what we just learned on swing point and swing low and next day model to frame a trade and see how price reacts to that and how we can make use of it on our trade. Over here we have the daily chart of DSY, and if we look left, we have this PD in form of fair value gap resting below here. So price is most likely to be drawn to this fair value gap. What do we have if we continue playing this chart? And what do we have? We have the price failing to close below the previous day low. So we anticipate a reach towards this high because price has failed to displace below this previous day low. If we continue playing, you see that price displays above this high. So our next draw on liquidity will be this high. We continue playing, you see that we have the price taking out the previous day high and we have a close below that. So our next draw will be this low. Our bias will be this low, or we can anticipate a reach towards this swing point. On the next day, you see that price moved down and it has also failed to reach our swing point. So we anticipate a move towards this low, or a move towards this PD or this fair value gap. If we continue playing, you see that on the next day we have the price taking out both our swing points and reaching this PD ray, and as you can see closely that price has failed to displace below our PD ray. So our next draw on liquidity will be a reach to this high or towards this swing high. As you can see, we have taken out this swing high and price has displaced above that. Our next draw on liquidity will be this high, and what do we have? We have the price failing to displace this high and a close below. So my anticipated draw on liquidity will be this low or towards this PD ray right here, this other block. I will continue playing. You see that on the next day price reached our PD ray, this other block, and has failed to displace below that, and that is when our next day model comes in. That is when we can make use of the next day model. Using the next day model, we have a PD ray in form of other block and price has failed to displace below that. So my bias will be to get an upclose candle for the next day. So my anticipated bias will be this previous day high or a reach towards this swing high. On the next day we get an upclose candle and price has also failed to reach this swing point. So we are also anticipating more of a move towards the upside. See that price has displaced above our swing high, and our next draw on liquidity will be this high right here. We continue playing. See that price take out our previous day high and we have a close below. So our next draw on liquidity will be this previous day low for the next day, or this swing low right here. If we continue playing, you see that we have the candle taking out previous day low and has failed to displace that. So we are anticipating another move to the upside towards this high for the next day, and we get another inside close candle. My bias will still be a reach towards this previous day high or this swing high. Let's just play. You see that we reach and displace above this high and also take out our previous day high. So but we are yet to reach this swing high. My bias will be for this swing high, and you can see we finally reached this swing high and we have a reversal model. We have a close below that. We have failed to displace above this swing high. So what we have, my bias will be a reach towards this previous day low for the next day, or this swing low right here. As you can see, price eventually took out our swing low and it's also taking out this swing low right here. So what is my next bias? My next bias will be our previous day low for the next day, or this swing low. If we continue playing, we have a reach to our swing low and also a close below our previous day low. So my bias will still be to the downside, and that is when I will look for swing point to the left. And what do we have right here? We have this swing point right here and another swing point right here. If we continue playing, you see that on the next day we swept our previous day low. So my bias will still be for the price to reach this swing low. continue playing, you see that price has reached our swing low that we have marked out. So that is how we can use the next day model to frame a reversal and draw on liquidity, and also using the help of swing point and failure to displace above and below swing points on the chart. Now let us look at some example going from daily bias all the way to the entry time frame. And on this example, we are going to be trading during the London session. So what we have now on this price action is price is eventually ranging towards this range, and what we have to do is mark out our daily high and low and see what the price does on the next day. What do we have on the next day? If we continue playing, you see that price has failed to displace above the previous day high, and if you look very well, we are actually on a downtrend. So my bias will be the price to reach here to this previous day low for the next day, or I might expect price to reach towards this swing points or swing low. So going down to the 1 hour, here we are on the hourly time frame, and you can also mark out your midnight open, marking that out, and we have our daily open marked out. Let's play towards the London open and see what we get. See that towards the London open we have a stop trade right here towards this fair value gap, and what do? We switch down to the 15 minutes time frame and see if we can get an entry towards the downside using this fair value gap. On the 15 minutes time frame, you can see the hourly fair value gap right here, and we have this liquidity sweep right here. We have this high being taken and a displacement towards the downside, but I don't trust this displacement. I would like to see more displacement towards the downside, then probably see a fair value gap or other block before I will enter my trade. So if we continue playing, you see that we continue displacing towards the downside, displace to the downside, and what do we have? You get this fair value gap right here. You have this fair value gap right here. I will enter my position right here and my stop loss, and I will be targeting this swing low, and I can also target 2 to 1 risk to reward ratio, or I can also go back to 1 hour and check out a swing low that I can target. Like I can also target this swing low here. So if we continue playing, and as you can see, we continue the move to the downside after entering our position right here. So guys, that is how I frame my bias and how I make use of a daily bias and swing point, swing low, and next day model to frame my trade. So if you find this video helpful, kindly subscribe to the channel, give this video a like, and also turn on the notification icon so that you get notified whenever I upload a new video.